Welcome, everyone, to another episode of Wolf Street. For those of you that don't know, my name is Wolf. And for those of you that do, thanks for checking me out again. As always, you can check me out on social media, all social media platforms, at EveryTimeICash, or you can reach out to me directly on my website, everytimeicash.com/contact. As always, this video and videos like this are for informational and entertainment purposes only and are not intended for financial advice or to be substituted as financial advice. If you're looking for financial advice, please seek the help of a financial professional and or reach out to a financial advisor that could help you formulate a financial plan that better fits your needs. This is for informational purposes only, and in this video I'm going to go over primarily the 5 big mega cap tech names this earnings period for this week ending April 30th, 2021. This is going to be the busiest week of this earnings season. This is the 5th time that these names all report earnings in the same week. I'm going to go over some of the levels. I'm going to go over some of my thoughts. I'm going to go over some of the other names that I'm watching. But by and large, this video will cover these 5 names. Now, on your screen, it says FMAGA earnings. You know, it used to be called, and it is called for a lot of people, FANG. You know, I don't think Netflix really lives in the same neighborhood as these stocks. Tesla kind of does, but I've already gone over Tesla. I've already made a video about Tesla. I'm going to link that video in the description section below, or in the description below, excuse me. If you want my opinions on Tesla, there's a 30-minute video dedicated solely for Tesla. You can check it out there. This is going to cover the 5 big tech names. That's Facebook, Microsoft, Apple, Google, Amazon. I'm going to go over those 5 names primarily in this video. A couple of other ones and some bellwethers and some of the thoughts I have. But by and large, this video will cover those names in particular. I'm gonna try to just jump right into it here. I'm not going to take up too much of your time. So I'm going to start with the chart of the S&P. This has kind of been the chart that I've watched and I've been watching. I went over it recently in a video I think 10 days ago. You can check that video out on my YouTube. You can check it out in the watch list attached to this video. You can find it. It's not hard. You'll see exactly how it is that I think of things or what I'm thinking of. So by and large, this has been the channel that I've watched in the S&P. We're pressing back up against the top of this range. You know, who knows? It could sell off, it could rally, but we're at a clear watershed moment for the markets with these 5 mega cap names, along with Tesla reporting earnings and other big names like Starbucks and Caterpillar, et cetera, et cetera. I'm going to go over that in a little bit here, but just want to start with the overall levels that we're watching. So we kind of pressed up against that 420 level in the S&P on Friday. It sold off as soon as it hit that level. Let me pull up the SPY, so it might be helpful. So we pressed up against, hourly, pressed up against that 420 level, basically made an incremental high and then just sold off into the close, but still very constructive, up and to the right. There's nothing really dramatically bad. It's going to resolve one way or another. We're going to get 5 really important informational pieces in the form of these mega cap tech names reporting this week. And we're going to get reports from a slew of other names that are important for the market, in general. So that's going to be the S&P right there. The NASDAQ, I'm going to pull up the hourly because it shows you a little bit more clearly. The NASDAQ has been in this like slight downtrend that started on April 16th of 2021. We pressed up against that level again on Friday, essentially that 14,000 level in the NQ, sold off into the close, and then is kind of just stalling out here, waiting for that next bit of data or input. So we're going to get it on the front end tomorrow with Tesla after the market, and then it's going to heat up into the middle of the week. So without just focusing on Tesla and Microsoft and Amazon, all that stuff, there are some other non-tech names that are important. They're on your screen here. Starbucks, NXPI, Visa, AMD, UPS, General Electric, Crocs, Texas Instruments, Twitter, Neo, McDonald's, Domino's, Overstock, Qualcomm. It's really busy. It's really dense, really busy week, and it's going to give us a lot of data and a lot of inflection points and a lot of things that we're going to look for. So before I jump into the mega cap names, I just want to go over a couple of the ones that I'm looking at that are non-tech, and there is one that is tech, but primarily like the non-mega cap tech names that I'm watching. So I'm going to start with Starbucks. Starbucks is often a nice read through to the consumer. Outside of Starbucks, McDonald's will report as well, and that usually gives a follow up to the consumer as well as in tandem with Starbucks. Visa also reports, so Visa is another one. So we're gonna have three really important consumer driven names that are going to give us a little bit of a tell on the consumer. I think MasterCard reports as well, but I don't have it in my notes here. But we're going to have, three really benchmark names for the consumer for sure this week. And it's a really solid read through. And what I want to see out of Starbucks is the consumer returning back to the way they were, going back to that quote normal phase pre-COVID. So that's one of the things we want to see out of Starbucks and out of McDonald's and out of Visa. And in Visa in particular, Visa's dealt with DOJ issues and some other issues, and it pressed up and made new highs last Thursday and Friday. Broke through that 230 level, I believe. And so it's going to be really interesting to see if that pent-up demand that the consumer has is still there. Is it growing, or is it kind of softened? And then outside of that, is the consumer going back to their old ways that they had pre-COVID? So those are the important things that I'm watching out of those reports. The next one I want to pay attention to is Caterpillar. Caterpillar is interesting because of the quote synchronized global recovery mantra that everyone has. So we're kind of, we had that COVID sell-off. The entire world economy kind of went into a little bit of a recession. And now it seems like there was this belief that everyone across the world is, recovering simultaneously. And that's from an infrastructure standpoint all the way to a consumer spending standpoint. And it'll be interesting to see what Caterpillar tells us about this. Now, Caterpillar is also interesting because it is going to give us a little bit of an insight about inflation. And Caterpillar themselves have pricing power, and by and large they probably will at some point, if not this report, raise their prices and kind of flex their pricing power muscle that they have. So those are some things that I want to watch for out of Caterpillar. I also want to see if they have any input about rising input costs for building. So if they're going to tell us anything about lumber prices, or if they're going to tell us anything about copper prices, or they're going to tell us anything about what they're hearing from their customers. And some of the names that you want to watch as derivatives will be John Deere, Tractor Supply, and what's the other one? United Rentals. So those are the names I'm going to watch for. I want to really pay attention to see if Caterpillar gives me any input about inflation or tells me anything about their customers, and if that global synchronized recovery is still intact, and if they're not seeing anything that could hamper that. The next one I want to pay attention to is Teladoc. So last week was interesting because we got Netflix's report, and Netflix, totally shit the bed. So last quarter, Netflix got a pull forward that was aided by COVID. So everyone was locked up. A lot of people who didn't have a Netflix account went out and got one, and Netflix was a beneficiary, of that. Now, Teladoc, DocuSign, Zoom, Peloton, the list goes on and on. Those companies also were net beneficiaries of that same pull forward. Now, Teladoc and DocuSign are the two companies outside of that list that I found, or that I find to be a shift in the way that, a shift in the consumer's behavior that will kind of stick. So I still think that when things go back to normal, people, and they kind of have started to go back to normal here in California, for example, people are going to go sign things in person, sure. But I do think that, people are there's an added advantage for me to just sit at my desk and sign something using my phone rather than going to a bank or signing something in person. There's an added benefit, saves me time, and I don't think that that's really going to change. Now, along with that, I also don't think that if I don't need to go to my doctor, like if I can talk to my doctor on the phone or using a video chat or something like that that can cover small things, and he or she could just write me a prescription and send it in, then that's going to be a time benefit, a benefit that I'm not going to have if I went and sat in a waiting room, et cetera, et cetera. So Teladoc is one of those companies that I think, kind of shifted and just really pulled forward the way that things are done. And I don't think that that's necessarily going to change dramatically once COVID is kind of in the rear view, but it will be interesting to see if my expectations are not actually in line with reality, or if, there is a slowdown for things going back to quote normal, or things becoming this quote unquote new normal. So I want to see what Teladoc has to say, because I think it could be a read through for the Pelotons, the Zooms, the DocuSigns of the world. And I also want to see if, there ultimately becomes a bifurcation between these names. So is there ever going to be an instance where, Teladoc starts trading independently of those other Pelotons and Zooms of the world? Or are they still going to be trading, basically as a basket? The next one is Tesla. I told you on the front end that I have a video for Tesla. If you want to check it out, please check it out in the description below. It's 30 minutes long, but by and large, Tesla's expected to report 79 cents EPS non-GAAP basis. It's up 23 cents a year ago. They're also expected to report 10.29 billion. That's up 72% year over year. So Tesla's expectations are really high. They bought Bitcoin. There's a lot of really unique names that are tied with ARK, and the Cybertruck's supposed to come out this year or next, and the semi-truck's supposed to come out as well. So Tesla is a cult fave. It's worth noting here, if I didn't make another video for it, the video of this video title would have been called or it would have been called MAGA FT or FT MAGA or F MAGA T, it doesn't matter. But Tesla is one of the six, and I'm going to reference this here in a second because I think it's important and it's worth noting. But Tesla has a video. Please check it out if you have the time. It's about 30 minutes long. So historically speaking, there have only been 4 other times that all these 4 big names, these 5 big names have reported, there's 4 other times that these 5 big names have reported in the same week. There, I said it correctly. So that was the week of January 26, 2015. And then the following result to those reports was a subsequent sell-off of 3.5% in the market, 3.58% in the market. Week of January 29th, 2018, same thing, 3.93% sell-off. April 27, 2020, that was a year ago, 4.51% sell-off. And then October 26, 2020, that was a 6.7% sell-off. Now, the fundamental question everyone's going to ask is, are we going to see the same thing, right? So I'm going to go back. I'm going to show you. This is your NASDAQ, right? So we're in this little downtrend. This could be a giant cup and handle. It could be a double top. It could be, an all-time high breakout. It could be a flag. There's several ways for you to define this and for you to look at it. But ultimately, the bet that you want to make is, are we going to resolve higher or are we going to resolve lower? So the 4 times prior to this, we resolved lower, and we had an average of basically 4.5% sell-off on average. Now, this time, this is the setup again. And if I go to the SPX, pressed up against the upper end of this trend, so SPX 500, this shows it a little bit more clearly. So, either we're going to press up and we're going to test this upper end of this range, and we're just going to fail, to which case we open the door for a prior all-time high test, which coincides with the 50-day and that 4,000 level, or we're just going to go explode higher to the upside because people are positioned offsides and people are expecting things to sell off and cool off, and everyone kind of doubts the market. I'm not sure what's going to come of it, but that's the setup into the report, and that's kind of what I'm watching for into the report. Now, the top 6 mega cap names account for nearly 25% of the market, and that is over $10 trillion. So, you have 75.6% of the market is everything but these 6 names, but these 6 names account for a quarter of the market. So anything that is remotely solid out of these names is going to essentially rip things higher. So the setup is either these things, are going to be really crappy and drag everything down, or there is a potential that they actually provide the rocket fuel that people are going to look for to ultimately push things higher. So I'm going to start with Apple. I'm going to start with Apple. Apple's consensus EPS forecast for the quarter is 99 cents. That is up from 64 cents a year ago. That's basically a 55% upside in expectations from a year ago. And some of the things I want to see is, how's the 5G refresh going? What is the chip shortage look like for Apple? Are they going to come out with another 17,000 SKUs of 14 different colors for the same thing? And whether or not people are positioned offsides in that name. So if we pull up Apple, Apple's been in this uptrend since July 30 of 2020. We've been in this uptrend. We held it 2, 3, 4, 5, 6, 7 times now, basically. And ultimately, that uptrend coincides with the 100-day and the 200-day kind of meeting at the same inflection point. So as recent as late February and early March, Apple really hugged that 150-day moving average and really hugged that uptrend. And here we are, broke out of this downtrend. Now we've got all this moving average support, and we're just kind of flagging and stalling here at the prior inflection point, which was 137, which was the prior high. So there is a potential that Apple doesn't do anything that is knocking it out of the park. And in that case, it has a lot of support. It's not one of those stocks that generally gets sold off aggressively on earnings. And again, has a cult following like Tesla. Usually people step in and buy it. And usually people don't necessarily trade it as much as they just own it. So it's kind of hard to really aggressively push that name to the downside. They really have to miss, and they really have to give you an unexpected set of data for it to do so. But by and large, really solid setup. And if people are offsides in terms of not expecting good things out of Apple, and they kind of beat those expectations, look out, because this is a very liquid and a very low expectations name. Now, the next one I want to go over is Amazon. Amazon's earnings are on $4.29 after market close. The consensus EPS is for $9.98 a share. And last year, the same quarter, they reported $5.01. Now, that's almost a double in the EPS expectations in Amazon. This will be the first quarter without Jeff Bezos at the helm. Are they going to kitchen sink it? Are they going to really knock it out of the park? How are they going to set the table, and how's the new guy going to start to speak to the market? What sort of story is he going to tell them? Those are the things that I want to watch for on Amazon. I also want to see if they have any input about the consumer. I want to see if they start telling us that people are by and large stuck online, or if they're going to return back to the way things are. Any input about that is welcomed. As always, AWS is going to be, kind of the elephant in the room for Amazon. What do they have to say about that? Is Google and Microsoft closing that gap still, or did Amazon find a way to pull a lever and kind of push ahead again? Now, technically speaking, Amazon's basically in the same spot it was in on July 13th. Has gone nowhere for like 9 months, basically in labor. So it pushes up to the upper end of the range and it sells off. If I zoom in here, it's been in this downtrend, And twice in the last couple of weeks, we've tried to push up above it, and it ultimately gets sold off at that 34.30 level. Now, if I zoom in again, same kind of setup that I showed on the NASDAQ. It's either a giant cup and handle, either a flag, or we're in this downtrend and it's going to roll over. A lot of it will depend on the earnings. A lot of it will depend on how they shift the investors' narrative and like what it is that they deliver to the investors. Do they surprise? But again, same thing. Hasn't gone anywhere for 9 months. Kind of at an inflection point. Has a lot of moving average support below. You see, a confluence of moving averages here. Let me give you an arrow. And then we ultimately want to see, does it break out of this downtrend, or does it stall out and then retest the bottom end of the range? Should it break out, it's a heavyweight. Again, same thing. Gives you another leg higher because people might be off sides the wrong way. The next one is Facebook. Now, Facebook's earnings are $4.28 after the market closes. EPS forecast is $2.35. That's up from $1.71 just 1 year ago. Facebook's kind of been a sleeping giant. It's hated, really hated name. People hate it for a lot of reasons. I hate the company. I barely use it. Instagram and Facebook. I don't use WhatsApp at all. And then Zuck's kind of fought with Apple about the rules that they've changed, and with Android as well. Really hated stock. Nobody likes Mark Zuckerberg. Expectations are not really extreme. Like it's just ripe for them to come out and crush, right? And ahead of their earnings, let's go to Facebook here. Ahead of their earnings, they broke out to all-time highs. So this is one of the names that started to act really well. Shout out to Chamath, because is it Chamath or Shemath? I'm not sure, but shout out to him, Chamath, because he wanted to come out and tell us that he was short Facebook in this little consolidation period. The stock's just been up and away since he decided to use his little Twitter fingers, let us know that he was short. So shout out to him. Couldn't have done it without him. But the stock started to behave on a relative and on an absolute basis very constructively and very aggressively, and broke out to new highs. It's one of the few names that has broken out to new highs. I showed you Amazon. I showed you Apple. They've been consolidating basically in labor, or excuse me, in pregnancy for the last 9 months, and they're waiting for a catalyst to push them higher. Now, in Facebook's case, they have Diem, DIEM, that is, their cryptocurrency project. That's kind of been one of the catalysts that's pushed the name higher. So they broke out, they came back, retested this downtrend that it was in from August 26th of last year until it broke through in mid-March. So they retested it here at the end of March, and then they just relaunched again, made a new high, and it's been flagging ever since. So I want to see if Facebook can outperform, if Facebook can continue to make new highs. And if it doesn't make new highs, if Zuckerberg fails yet again to impress and gives people to hate him, another reason to hate him, you've got this moving average support and you've got this downtrend support that kind of lines up in that name. So Facebook's one that I think is pretty uniquely set for their report. Now, my favorite name of the bunch continues to be Google. So Google's expectations on April 27, 2021, are for $15.45 a share. That number last year was $9.87. It's basically a 50% increase. But Google this year has been the best performing name of these mega cap names. It's up about 30% year to date. It's been my favorite name. It's been my heaviest weighted name. Going into the year, it was my favorite name of the bunch, and it continues to be. Google's got a lot of levers they can pull. They've got YouTube. They've got, their organic business and search and clicks. They have a lot of things that they just come out and surprise you with. And if they ever wanted to spin off YouTube, for example, it could really create a growth driver in the name. They also have a competitor to AWS and Microsoft. So it'll be really interesting to see what it is that Google says and does. Google's a beneficiary of travel. So most of the travel searches online come through Google. So it'll be really, really interesting to see what it is that Google comes out and says, what it is that they provide in terms of guidance, what it is that they tell you that they expect, and what sort of trends that they've seen. Now, technically, Google's been awesome. It was in this rising wedge, kept pressing up against that upper end of this wedge, and it would sell back, find support, and ultimately it gapped up above it, and it consolidated for the better part of 3 months before recently breaking out. So this is a really awesome chart, really, really growth at a reasonable price name, very cheap name relative to some of its peers, very cheap relative to the other mega cap names. So Amazon, for example, is on the upper end of the expensive side in terms of like what it is that they generate on an EPS basis, or how it is that they remain profitable because they just reinvest all their money. Google's the opposite side of that spectrum. It's a cash cow, really slow and steady, really solid name. My favorite of the bunch is Google, and I'm really interested to see how it is that they report and what it is that they have to say about their business. So the next one, obviously, is Microsoft. Microsoft is another one that I was kind of shocked when I saw, because their expectations are for $1.76, and last year it was just $1.40. So this is just like a 25% bump, year over year. So again, really ripe situation where expectations are not extreme. It's a very, very dense business. It just, on the commercial side, they really tap into everything. And with their launch of Teams and with things becoming more and more digitized and people not needing to go into the office, they've kind of had a stickier base consumer, and they've kind of found new ways to reinvent the wheel. Now they've realized that they have all this cash, and they've realized that they have all this stock equity capital, and they've started to kind of try to put it to work. So last week there were reports saying that they were interested in buying Discord, for example, and that deal kind of fell through. But that just shows you that they're aggressive. It shows you that they are looking to kind of get their tentacles out there still, despite making acquisitions. Last year they were in the running for TikTok, for example. So they're constantly looking for ways to just grow their tentacles out there. And then despite all that, and even with all that, their expectations are not like extreme, and it's kind of uniquely positioned to possibly outperform. Now, it'll be interesting to see what it is that they say about their competition with AWS. So it'll be really interesting to see what it is that they say about that business segment for themselves. It'll be really interesting to see what they say about businesses in general, and what they say about the return to normal. Like, are people going to go back to the offices? What are their expectations? How do they see their customers sticking around? What sort of cost reductions, if any, do they see out of their consumer? So it's a really interesting name. Again, like Facebook, this is a name that broke out. This is the second best performing name of the bunch this year. I think it's 17%, if I remember correctly. Could be wrong, but Microsoft was in this little wedge from mid-January until it broke out here on April 1st. So I'm gonna give you a little arrow. Broke out and it was up and away. So now it's currently just flagging. There's a potential that it checks back this prior all-time high back to the 50-day. Who knows? Potential that it checks back to the 20-day. Who knows? But it is flagging. It is setting up for up and to the right, potentially more highs to come. It's a name that I don't own. So this is not me. Unlike Google, this is not me talking my book. This is not me telling you that, I'm really huge fan of Microsoft because I'm pumping something that I own. I don't own Microsoft, and I actually do a really shitty job of trading it. I've traded it like 2 or 3 times in the last 6 months properly, but outside of that, it's just like kind of scalps and not as great as I would like it to be. So I'm gonna end with a couple of things. The QQQJ, which essentially is like the smaller names. Let's just draw a basic triangle essentially. Has been in this, it's you can say it's a triangle, you can say it's a flag. We'll see how it resolves, but it's pretty interesting. Because it's underperformed, and I just drew a really shitty triangle. So forgive me. I'm not like trying to be perfect here. You could say that it's starting to break out, but I'm not trying to be perfect here. I'm just trying to illustrate a point. So that's been that way, while the QQQ in general, which is the mega cap names, the bigger names, a little bit more diverse names, have made new highs, and now we're consolidating at the prior high, and we're either in a cup and handle, like I said, on the front end, setting up for more upside, or we just kind of trap some people and we might check back and get a little bit of a sell-off. So going back to Microsoft, this has been one of the names that's pushed it, and primarily Google's another one. So what I would like to see is, are the winners going to continue to win? Are the laggards going to play catch up? So let's say, for example, Apple kills it, and no one really expects Apple to kill it, but for whatever reason they kill it. Now, is this money going to rotate over into Apple from that QQQJ side of things? Like, are they going to sell the Zscalers of the world to buy the Apples, or are they going to sell their winners like Microsoft and Google to buy the Apple, or are they just going to buy Apple, and then it just becomes a broadening out thing, right? So the part of the reason I'm thinking about this and I want to see this is because one of the things, and I'm going to have a video here shortly that goes over it. One of the things that I've kind of noticed is the more, like, nowadays we are seeing more and more, like, they say it's rotation, right? So you hear this term saying rotation is happening everywhere, and you get rotation, but more and more I'm finding that, and I'm assuming, this is assumptive of me, that, or presumptive of me, that with the help of, computers and algorithms and algorithmic trading, we're seeing more and more distribution and more resets that are happening kind of under the surface and not in unison. So that word salad basically means, in mid-March we peaked in the IWM, and we subsequently sold off 7%. So in mid-March we peaked in the IWM, and if you go here in mid-March in the Nasdaq, we were nowhere near the highs, right? And as we sold off in the IWM, and IWM, and we've gone nowhere, well, then the Nasdaq just kind of picked up the slack and went higher. And it kind of happens under the surface. So like, we got a 7% sell-off in the IWM, and by and large, the market didn't feel it, right? So IWM peaked here. Like, what would we get? What did we get in the S&P there? We went from 397 to 384. Like, it barely flinched, and then it was just up and away. And if I just put up the S&P's chart, you wouldn't notice that the IWM is not at its all-time high. And we just recently, as of Friday, broke out of this downtrend. So one of the things I want to see in these reports, and this is like primarily, like, if I go back to Apple, I want to see if that same type of behavior occurs in the same segment of stocks, so in the same grouping of stocks. So does that same behavior occur with, like, these mega cap tech names? Like, are we going to see instances where we get like little sell-offs in Microsoft and Google and Facebook, or one of those names, and then rallies in the Amazons or Apples or whatever, Tesla, it doesn't matter. Like, are we going to see that same type of behavior where overall, the entire group of stocks, the QQQ in this instance, continues higher, and it does so without all of them going higher. So that's something that I want to watch, number one. Number two, I want to see if, like what I just showed, where we had outperformance in the IWM for so long, and we just kind of gave up 7% and didn't even feel like anything. If we get that same type of reversion in these names, so does the QQQ assume leadership again because everyone kind of positioned for that synchronized global recovery, and everyone was still on one side of the boat where they thought, oh, we're gonna have, the 10-year is gonna go higher, and we're gonna have inflation and synchronized global recovery, and we need to buy physical stocks, and the tech names aren't gonna do as well in that type of environment. Is that positioning then wrong? And then we have an offsides positioning where like not enough people own these mega cap names. So those are the two things, like the two primary things I want to watch. So I'll make it really simple. Is the rotation factor that I think is aided by computers these days, is that rotation factor, does it also work in the same segment of the market? So like, does it work within tech in addition to tech versus other types of names? That's one. Two, are people offsides in terms of positioning for banks rallying, IWM small caps rallying, and the what I like to call grandpa stocks rallying? And because of that, offsides in not positioned enough in these tech names. Because if that's the case, then we might have a situation where these tech names just kind of continue to hum along because, they don't really have anything that is too outrageously expensive, and they are totally necessary for the functionality of our society and our world. And then now people need to chase them higher, which ultimately chases other things higher. So those are the thoughts that I have. That's kind of how I'm thinking about it. And I'm going to wind back. Let me go back to that photo. I'm going to wind back here and tell you that the last 4 times these names all reported in the same week, things were, they resolved lower. So I'm not the only one that sees that. I know I'm not the only one that sees that because I saw it on CNBC. So is this an instance where now that everyone's expecting one thing, that we have the potential that people are offsides the other way? Or is it an instance where they kind of just bifurcate and they give us individual performance within the group? So those are some of the thoughts that I have. As always, I appreciate your time. As always, if you like this content, please like it. Please comment in the comment section below. Please subscribe to the channel, and let me know if you found this useful. If you like this and you want more of it, please let me know, because I like to allocate my time accordingly. If you've watched this for 30 minutes, please don't forget to check out the Tesla video I put up if you want to check that out as well. As always, please stay safe, please stay profitable, and stay locked in. Thank you.